In the world of entrepreneurship, there's a commonly thrown around statistic that says 50% of all startups fail within the first 5 years, and of those that make it beyond the first 5, 50% will fail in the next 5 years. But despite this demoralizing statistic, we're seeing a shift in the entrepreneurial world of fintech. Increasingly, we're beginning to see fintechs break the mold and defy the status quo, emerging as some of the most valuable companies in the world. In business, the term unicorn is given to a privately held startup company that is valued over $1 billion. And the reason it's named after a mythical creature is simply because of how statistically rare it is to achieve such a feat. However, according to Fintech Live, as of January 2021, we now have 134 Fintech Unicorns globally. And even in Africa, we have 6 unicorns like Interswitch, Flutterwave, Fori, Cash, Opay. And just last month, in their latest funding series, Wave joined the list. And 4 of these unicorns are coming from Nigeria, with the likes of Opay, Interswitch rivaling the valuation of some of the largest incumbent banks. In Ghana, we see trailblazing fintechs like Zpay, Approve, ExpressPay, Jumo charging towards that unicorn status. But what does it take to succeed as a fintech? What are the factors that have led to the rise of these disruptors in such a tightly contested space? What combination of elements drive the growth and sustainability within the fintech startup space? These are the questions we answer in this video. Hello friends, welcome back to the channel. My name is Jeremy, and if you're new here and haven't yet subscribed, please consider doing so because on this channel I speak about digital transformation, agile strategy, and personal development. In a recent video, I spoke about how to set up a fintech startup and the key aspects to focus on to ensure you get off on the right foot and don't expose yourself to unnecessary risks or self-sabotage. You can check that out if you haven't already. I believe that is a good precursor video to this video. But once you have your fintech startup established, licensed, and registered, that's where the real work begins. In order to grow and thrive, there are a number of factors that need to be prioritized if a fintech is to break the statistic and ascend to the desired level of success. So in no particular order, let's explore the list of what it takes to succeed as a fintech, starting with funding. Money should be top order in your priority list as a fintech startup. This usually has to emanate from your business plan, and your financial planning needs to be on point. The top fintechs clearly know how much capital they need to launch, how much is required to cater for operations and working capital, how much capital is needed to scale in order to break even and reach profitability. The reality is funding is not a problem isolated to fintech startups alone, but almost all businesses, be it startup or not. Funding is the fuel that keeps the vehicle moving. Fintechs that succeed plan their funding in advance because they are cognizant of the fact that the sector they are entering into has large incumbent financial entities such as banks, insurance companies, and other fintech companies that have very deep pockets. In order to attract potential clients, partners, and even other investors, you need to have good funding in place to execute your vision. The typical nature of fintech is that they usually require lengthy runway periods before they achieve profitability. Most fintechs rely on achieving economies of scale because they're typically operating as a B2C or business to customer model. Because of this, they most often need high upfront investments, or what I like to call patient capital, that gives them the financial cushion to run operations till they reach critical mass. If you Google the #1 reason fintechs or startups fail, you will most likely have funding as a highlight, so give high priority to money. Next is innovation and technology development. The rise of fintech has mainly been due to the rapid evolution and adoption of technology in the modern age. Most incumbent institutions have been slow to keep up with this pace of change, and this is what has left a gap that the fintechs are filling. However, in order to succeed in filling that gap, fintechs have had to innovate faster and create unique solutions that customers find valuable. Successful fintechs tend to be built on outside-the-box thinking to create a unique value proposition or to significantly improve existing processes that are operating suboptimally. Because fintech startups don't typically have the ability to compete on size and reach, they leverage innovation, technology, and agile delivery to get ahead. Fintechs invest heavily in technology infrastructure to boost their service quality, as well as become more efficient through automation. Fintechs leverage big data, cloud infrastructure, machine learning algorithms, and blockchain, And this is the reason why bills can now be paid via QR code. People are able to receive remittance straight to their wallets or accounts. Loans can be disbursed via USSD short codes, and financial products are tailored and accessible via mobile application. Achieving operational efficiencies and leveraging technology to create a unique value proposition has underpinned the success of many of the top fintechs. Next is the target customer and the customer experience. Now, one of the main pillars that underpins the success of fintechs are the customer segments that they target and the experience they grant to those customers. In emerging markets like Africa, it's common to see fintechs in payments, lending, remittance, and insurance, targeting the unbanked or underbanked segments of the population. By focusing on these underserved customer niches, fintechs are able to obtain first mover advantage, grow and achieve scale due to the high visibility, high demand, and lower competition. The customer experience is also a significant factor when it comes to building trust as a fintech. We tend to say in the modern world that self-service is the best form of customer service. However, that does not mean the customer does not want any form of human interaction. The most successful fintechs are able to identify the needs of the customers they serve and tailor their products and services efficiently to suit those needs. Take MTN Mobile Money, for example. Despite the fact that they created a USSD product that has a basic functionality, an intuitive design, minimal number of steps in the customer journey, they also have invested in an extensive agent network that gives the customers the opportunity to be guided along the customer journey if they require it. Granting the customer a delightful experience is the best way to obtain the word of mouth referrals that help build the trust in a fintech without a recognized brand. Placing the customer as the focal point of all innovation is fundamental to achieving success as a fintech startup. Next is leadership and organizational culture. Now, going down the fintech route of entrepreneurship is a bold endeavor. It requires visionary leadership, an agile mindset, maniacal focus on goals, yet flexibility on the path to be taken. An organization is usually a reflection of its leadership, and the most successful fintechs are typically led by individuals with a unique combination of skills, knowledge, intuition, tenacity, grit, all the good stuff, but also a relentless pursuit of knowledge about their industry and the emerging technologies. Successful fintechs also place a premium on their organizational culture. Having a high-performance culture that aims to challenge the status quo and attracts the right kind of talent and personality is key to winning in this space. Decisions are usually based on data, and even with that, they tend to focus on making data-informed decisions rather than data-confirmed decisions. So rather than unilaterally deciding a course of action to take and then gathering a ton of data to support that decision, they rather look to the data first to supply the insights based on which they decide to make a decision. An agile culture that encompasses collaboration, innovation and learning, collective purpose, inspiring leadership are key elements to position your fintech for success. I have a full video linked on how to create an agile culture using Netflix as a use case. If you want to delve more into that, you can check that out. Next, we have strategic partnerships. As mentioned before, the field of financial services is dominated by incumbent players like banks, insurance companies, and others who have been in the space for decades, if not centuries. It's a very bold statement as a fintech to proclaim to be a disruptor in the space. Most of the time, that isn't the case. Fintechs often benefit from strategically partnering and collaborating with industry players who already have the experience and customer base that needs serving. Rather than always looking to compete, collaborating in an ecosystem with different actors allows fintechs to benefit from the synergies between vendors, distributors, and incumbents to thrive and establish a sustainable operating and business model. This is particularly prevalent amongst payments, lending, remittance fintechs. Lending fintechs often partner with banks to underwrite their loans or mobile money institutions to access their customer base and leverage their platforms. Remittance fintechs partner with banks and mobile money institutions to provide in-account and into-wallet cash out. Hence, partnerships are a strategic lever for any fintechs looking to thrive in the space. Finally, we have government regulation. Now, this success factor has less to do with the fintech and more to do with the environment. In this case, the regulatory environment which can't be avoided. The financial services space is heavily regulated, and even though the regulators are trying to make it more innovation-friendly, fintechs are also falling under these weighty regulations. In other territories like Europe, where we're beginning to see more harmonization of financial regulation to make the financial industry a more level playing field. However, as a fintech, your business could be hampered or halted due to a change in policy by the regulator. It's key that you stay cognizant of the regulatory environment in which you decide to establish your fintech startup, since that will be key to your long-term growth and sustainability. An innovative approach which some of the top fintechs have chosen is to integrate with central payment systems, which establishes you as a systemic player, provides you regulatory recognition and support. In Ghana, for example, we're fortunate to have a dedicated fintech and innovation office that proactively creates policies and engages with fintechs to ensure keen oversight, yet create an innovation-friendly environment. Success stories such as Ghana's adoption of mobile money interoperability, which allows for transactions between different mobile money wallets, is evidence of how collaborating with regulators can order well for your business or order well for the success of a fintech in the right regulatory environment. So friends, there you have it. Each fintech will have to define what success means or looks like to them. However, there are also general factors that come to play or must be considered to attain startup success. Funding, technology and innovation, leadership and culture, customer experience, strategic partnerships, and government regulations are among the various considerations to be made. I hope you found this video valuable, and if you did, remember to hit the like button and leave me a comment, and I'll see you in the next video. Cheers, guys.